All right. Good afternoon, everyone. This is Daniel from Tradecraft 360, and I thought I would just update everyone on my QQQ short. So that was the 530 put that I purchased on the Wednesday into Thursday. And so, or I should say that the 530 put was purchased with a December 16th expiration. So pretty simple trade. I thought that the market was slightly overbought when it hit 530, and I was just going to do a day trade. And the next day there was a break lower to trend support, and that's when I elected to close out the trade. It wasn't meant to be a longer term position or a net short on the market. It was just a quick, simple in and out type of trade. And I could have gotten better prices, but unfortunately I'm on Hawaiian time right now, so it's a little bit tricky to wake up at 4:30 in the morning for the market open, but I am trying, so I was able to do that on the Friday. But in any event, so I could have gotten slightly better prices at the break at the open, and but that's fine. Like, I wasn't trying to knock it out of the park with this one. So as you can see here, I sold to close for 280. I purchased this for 260, so that's 1,000 US, and then the 524 put, I closed that out as well for 3 cents. So that was another 1,000. So 2,000 US on this trade. Fairly simple, in and out, and not much more to say other than I sort of detailed in the analysis section sort of what I've kind of anticipating over the next 2 weeks from December 21st to the 31st year end. The market does have a proclivity to rise, and that says a statistical anomaly that goes back, I think it goes back even to hundreds of years for some reason or another. I'm not entirely certain the reason behind it. I'm not entirely certain if anyone knows, but it is, and it's a replicable, statistically significant proclivity for the market to rise over those for that period of time, otherwise known as the Santa Claus rally. And I wouldn't necessarily want to layer on new shorts for that period of time, but I do think that there are signs of exuberance. So Peanut the Squirrel, that token is a good example, crypto more generally. However, you can't ignore the fact that there's a lot of sector rotation going on as well. Like, utilities have been, transports, utilities, especially healthcare, they've taken not insignificant hits, right? So they actually have given up a large percentage of their year-to-date gains. So I don't know if that portends a wider decline in the indices, or if that's just actually healthy market behavior in the sense that, certain sectors will take a break, other sectors will take the slack, so to speak, pass the baton, and on it goes. So it doesn't necessarily portend a wider correction. However, what I do like to do is blanket on protection to the portfolio. Usually what I like to do is use NDX shorts, which is I detailed that in a prior trade. So even if I lose money in the sense that the market goes higher and the short doesn't pay out, so long as I can cover the extrinsic value, because it's protected, right? Then it's fine. It's just meant to provide some element of overall portfolio protection, such that if the market were to break lower, like in August, where very few traders, including myself, were not really anticipating such a move to the downside so quickly, then you can sort of take advantage of that and make some money instead of just not losing money with portfolio protection, right? Like, if you buy a call or buy a put that protects to the downside, that just prevents you from losing money, doesn't actually make you any money, and does allow you to reestablish a lower cost basis over time, and that's always a good thing. But sometimes it actually is nice to make money when the market goes down, and you have to then set up a bearish trade. I wouldn't necessarily want to do any additional shorting of the market until maybe in the first week of the new year, something along those lines. Just put on another NDX position. And so then I'd have the one that goes out to April. Maybe I would go out to June, and that would be substantial because the NDX is a monstrous product. So just one contract is like, it must be like, what is that, like 1.9 million or something like that, the notional value. So it doesn't require a lot of contracts. It's relatively efficient from that perspective. So I've belabored the point a little bit. So yeah, nice in and out, and we'll see what next week brings. As far as the app loving is concerned, I'll update that a little bit later on. All of my calls sort of expired worthless. I did sell new calls into next week Friday, so we'll see what happens there. I do have till December 27th for that to work itself out. My Amazon trade has done quite well as well, and there's a few others that I should post, but that's it for now. So yeah, hope everyone's having a great weekend, and we'll wait for Monday and go from there. All right, everyone, take care. Bye-bye.